Okay, so here we are again. We're going to do our adjusted trial balance. We already kind of went over a little bit of it with the SPY supplies because we knew the ending balance had to be 4,000. And so we did that as our plug to figure out our adjustment. So that was the only one where we actually had the ending balance. Now we're going to calculate the ending balance for all of them. And we could see that cash had nothing happen to it, right? So nothing happened to cash. So it's debit balance 11,000. We'll just carry over to the adjusted trial balance. Not too bad. Same with accounts receivable. Not too bad again. Prepaid insurance. Oh, we see a debit for 12,000 and a credit for 2,000. So we're going to take that debit minus the credit, right? 12 minus 2. So we have an ending debit balance of 10,000. That makes sense. Prepaid insurance is an asset, and the normal balance for an asset is on the debit side. So that sounds right. By supplies, we can see the 6 minus the 2 is the 4,000, and that's what C told us over here, supplies on hand. So we are good there. And SPY equipment, nothing happened to that. So we have 7,000 for a debit. All right, here is our accumulated depreciation. It's a contra asset, so I think contrasting, opposite. So normally an assets balance is a debit, but this is the opposite because it's a contra asset. So its normal balance will be a credit. And we can see that it has already a balance of 1,000 as a credit. And we're adding an additional 5,000 depreciation. So now we have an ending balance of 6,000 credit, right? Two credits added together and we have 6,000. Sweet. All right, accounts payable, nothing happened to that. Oh, almost did the wrong thing. See here, debit, and it's a credit balance for our liabilities. All right, our capital, nothing happened to that. So bring over that credit balance. Our withdrawals are for dead curls, right? That's our dividends or withdrawals. In this case, that's 8,000 debit. And then we have revenue from the clients, credit of 42. And then we have rent expense with our debit of 11,000. So let's go ahead and plug that in. And then we have, wage expense. We adding an additional 9,000 debit in our adjustment entry. So 9 plus 4 is 13, right? So we have 13,000 here now. All right, we're not done. We have these additional ones, these additional 4 that we have at the bottom that we need to do. So let's go over there. That's a debit for our depreciation expense, another expense insurance, another expense supplies, and then we didn't have liability account wages payable, but now we do, and it's credit balance, so we're going to bring the credit over here. So let's add this up. So I'm just going to do a quick formula. Okay, you can add it, and you could do fancy formulas in here if you are good with Excel, but to keep it easy, we just did it like that, but you could have done formulas throughout. I'm just going to copy that over. So you would add up all of your amounts in the debit column, all your amounts in the credit column. I just did a quick key to get that, and I can see my debits equal my credits, 80,000 for both. So I'm happy, it balances, cool. So now let's do the income statement and the balance sheet. So let's bring those over. So first we're going to do the income statement. Well, what's on the income statement? Only revenues and expenses. So any assets, liabilities, or the capital, we're not going to bring those over. We're only going to bring over our revenue and expenses. So let's jump all the way down to revenue from clients right here. And so our income statement column starts off with ending credit balance of 42. So we're just going to bring over that 42 to our income statement. So let's go ahead and type that in. And then we have expenses. So we did all our revenues, which just so happens to be just one revenue account. And so now we'll have to bring in all our expenses. So 11 for debit, 13. Make sure I do this all right. 5, 2, and another 2. And that one is payable. That's not an expense. That is a liability account. Okay, so now we're going to go ahead and total this up. I'm going to add a little additional thing down here, and I'll talk about it. You'll see it appear in a second, and I'll talk about that. All right, so you see some additional rows just added here, and I'll explain that in a minute because we're going to add this up and this is not going to balance. So we had a perfect world with our adjustments column and our adjusted trial balance and also our unadjusted trial balance with the 66,000. But this one is not going to balance, and we'll talk about it as we get to it. We're going to figure out basically what our net income amount is. So you can add these all up and you get a total, and it's 33, and that's what I have on my little paper. And then, oh, I gotta add in that extra column. There you go. You can do your formulas any way you want, but I'm just being quick here. Okay, so we have credit balance, that's our revenue of 42, and then our expenses were debit balance of 33,000. We're not in balance. That's okay. Let's talk about that. We have revenue greater than expenses. So what do we have? Well, we have net income. When revenue is greater than expenses, we have net income. When expenses are greater than revenue, we'll have a net loss, and some people call it profit and loss. But we have a difference of 9, right? 42 minus 33 is 9. The 42 is our revenue. It's greater than our expenses. So we have 9,000 of income. So you can be fancy if you want to do formulas in here. You can. I knew the number, but there it's 9. Okay. So we have now, if we plug that 9 in, and we'll talk about that, but that we know is our net income amount. We can see that we do now tie. So we'll do that real quick and we'll talk about that. So now we're happy with our income statement column, and let's move on. Let's do our balance sheet now. So we already did all our income and revenue, or revenue and expenses. So we don't repeat them. They don't go on the balance sheet. They're on the income statement. Now we'll just do the balance sheet accounts. Okay, so we have a cash of 11,000. Nothing happened to that, so that balance just carries over. And we see the adjusted trial balance was 10,000 now, so we'll bring that over. We have 4,000, we have 7,000, and then 6, 4, 19. All right, cool. We didn't need to do much with that. And then, yes, I know withdrawals. This is our worksheet that's helping us balance out things. We know that either your statement of stockholders' equity or our statement of owner's equity, we would have our withdrawals on. That was what I was trying to say, but we're going to put it here on the balance sheet for this purposes of utilizing our worksheet to make sure we balance, okay? So we know normally that withdrawals or dividends, if you're doing financial accounting, they go on the other statement, but we're going to put it here. All right, that's what I was trying to say. All right, let's go all the way down, and there was a payable. There we go, that's a payable. We have to put him in too. All right, now we got everything. So we don't repeat these guys because they are already on the income statement, right? So we'll leave those columns blank. But we don't want to forget that wages payable. He was down at the bottom. He's a liability account, so we need to include that credit balance. All right, now let's add up everything. So you just add up everything in the debits. I'm just doing a quick with this. All right. And we have, again, not balancing, we have 47,000 for our debits, and our credits is 38,000. We're not in balance, but you know what? What's that difference? It's the 9,000. It's actually our net income. And we can see that that is going to be our credit. We have a debit on the income statement. It was like a plug, basically. And it makes sense that we would have a credit balance, actually, because our revenue was greater than our expenses, and so net income actually increases our equity, and equity will increase with a credit. So you can see that. All right, let's bring that down now, and then 38 plus 9 should be 47, and we tie now. Now we're happy. So this plug here that we did that was just our net income. And now we have our balance sheet tying out, our income statement tying out. We are done with our worksheet. We are all happy. And so we are ready to now piece these out into our financial statements.